All right, folks, welcome back. This is the October 13th, 2021 midweek commentary for the ICT Mentorship. And before I get into it, I had a couple questions came to me by way of email, and a few of you were asking, what did I mean by dollar being in a consolidation? Well, if you look at the daily chart like this, and you have about this much worth of data, you can clearly see how we worked from this high back here all the way down to the low in 2021, and then all of 2021 we basically begun sideways. So between this high here last fall to now, we've been going sideways, which is largely attributed to the big bull run in commodities. So the dollar has been kept from falling while commodity prices have been going higher. So the cost of grain, cost of meats, energy, all those markets have been going higher while the dollar index has been going sideways. Where in a normal market function, it's the dollar index itself going lower in relationship to higher commodity prices. All of this COVID stuff, this agenda that they have going on, has caused a short circuit, if you will, some kind of normalcy in the marketplace, which is why I've been telling you that the markets have been operating in an elevated level of risk. Dollar index should be dropping with higher commodity prices. We've been seeing it go sideways. And what did I mean yesterday or last night when I was saying that even though we're in consolidation, we've been modestly bullish? Well, we've been looking for these little runs in here to get into this area over there. Now, when I zoom in, I show you the normal chart, which I'll show you in a moment. You've been looking at this high to that low, and it doesn't look so much like a trading range. It looks like this has been in a bullish market trend. Now, I guess if you want to just go back to the summer, then yes, that would be a bullish trend. But from a macro stance, taking a step back and looking at what you're seeing here on a larger scale, we really ain't been seeing too much of a bullish market. It's been consolidating. So that consolidation, even though we're in trading ranges and consolidations like this, there's going to be market rallies and market declines. We've already worked 1, 2, 3 times the lower end of that range between high and low. So that's why I've been holding this modest bullish stance on dollar. What makes it modest? Why am I not exceedingly bullish? Well, because we've been seeing higher prices in commodities. They do not move in the same direction. Okay, higher prices in commodities and higher dollar, this doesn't happen. Okay, it does not happen. It might happen on a day or two, in terms of, a Kraken correlation type event. But as a normal market condition, higher prices in commodities across the board, like in foods like coffee's been going up, sugar's been going up, cocoa, as we'll look at again tonight, grains, all the grain markets, all the meat markets, lumber, all those markets have had pretty impressive rallies to the upside, while the dollar itself has been consolidating. Now, if you look at it from very short-term levels like here to here, that might be bullish in terms of a trend for you. But for me, I'm looking at what we've done here. From here to here, that's a trend. Okay, that's a trending market because it's on a higher time frame macro daily chart. And it's lots of range and time. Whereas we have more time going sideways than we did this entire time here to here. Well, maybe not so much more time, but let's see. Let's get a rough idea here. We went from basically March or so, March to January. So that's what, 9 months? So yeah, we've been going longer from October to here. Yeah, we've been going longer sideways than we did declining from this high down to that low. So we've spent more time consolidating than we did this decline back when the markets, well, not the markets, but the economy was shut down because of all this pandemic. So this consolidation is what I was referring to. So that way we are on the same page. And what I mean by modest bullish stance on dollar, that's why the markets are at a snail's crawl in Forex. This event right here. Okay. Now, because of this consolidation, this is what makes the crosses, as I was teaching last night, which allows the crosses to be a little bit more potentially volatile than that of the dollar crosses, because we're seeing the stranglehold on dollar. Okay. And I made a mistake last night, and I had an email from one of the students out of all of you. Now, if you've sent an email with this and we didn't catch it, or my staff didn't push it, I only got one of them sent to me. And that's all I need. I don't need anybody else sending me, hey, you made a mistake. But in the slide last night when I was discussing cross-pair manipulation, I'm going to include the corrected jargon, so that way you can see what the slide should have said. I made a mistake last night, and even reading it last night, I didn't even pick up on it, so I was too into what I was saying. I didn't happen to notice the mistake I made, and we'll get to that later on in this presentation. But I just wanted to cover this real quick and show you what the relationship of this consolidation in dollar, what did I mean by that? This is what I mean by here, okay? Now, remember, we're in this consolidation, and today we had FOMC minutes come out, and we had 8:30 a.m. numbers come out for dollar. So we're going to take a look at this relationship here in our normal perspective, which is this. So you can see right away it changes the entire dimension of perceiving what is in this fractal, this segment of price action. It looks like dollar's bullish, when it's really just modestly bullish in relationship to what I just showed you from the macro perspective. So we went above this short-term highs we were looking for the week. We got that, and we wanted to see if it had the ability to get it back above this high here. And FOMC today and the numbers for the 8:30 in the morning New York session offered a cover for this to decline. Now, if you go into Forex Factory, which I'm not going to do for you, but if you go into Forex Factory and you look at the economic calendar for the dollar-based high-impact news that came out 8:30 this morning for the 13th of October 2021, you will see that we had 0.4% as the actual, where the expected was 0.3%. Normally, if you have a number that's better than expected, which is what they posted today, and I don't look at this stuff, and I don't try to digest it, and this is the reason why. The normal consensus is if that number they give for the data release that happened at 8:30 for dollar, if that number is better than expected, in other words, if the actual number that they release as the data point at 8:30 is higher than that of the number that was expected or forecasted, then that would be good, or quote-unquote bullish, for the currency. So we had a number, not by much, but it was better, and look what they did with the dollar. So FOMC days, classic scenario, you sit on your hands and you wait, because tomfoolery can come in at any moment, and this is what we got here. Now, I'm not convinced that what we've seen here today is an outright reversal. This, to me, looks like a bait and slam. That's not a technical thing. It's just something I've always said since I was in high school, where it looks like it's rejecting that. But we only went above this high here and didn't really quite get up to here. And this is the high in that trading range. Now, it very well may continuously drop from here, and that's okay. I'm just going to wait a day or two before I change my outlook over here. I'm not in a position that would change, I guess, my confidence of holding a trade or taking a new trade. I'm waiting for more information. And this is one of those times where I said to the new folks that just came in here on the last group, you're going to hear me come in at some point and say, hey, I'm waiting for more information because I don't trust this initially. We could literally just be coming back down here and recapitalizing this bullish order block. That's all that could be happening. I haven't abandoned this near-term bullishness to get above here for the liquidity, because that, if it would have went above that today, I would be expecting some kind of tomfoolery where it would reject and crash, not crash entirely all the way down to like 92 or anything like that, but I'd be expecting some kind of washout, because we've pushed up basically from the beginning of the year to now. So this is the high to watch still, and I'm not convinced yet, okay, because I'm not trying to build the idea that this whole thing here that's been moving up all year and the trading range that we're in for this long duration of time has been topped. In other words, it hasn't proven to me, because look what we've done here. It's just a small little modest pump above that short-term high. And then they offer this on news that the dollar should have received higher prices. So to me, it feels like chaff, okay? They're throwing confusion into the marketplace, so that way no one knows really what to do with it. When I'm saying that I still see it likely go higher from here, maybe not immediately tomorrow, but I'm not suggesting at all that this is reversed yet, because I don't want to make the case on a market reversal on one single candle. Okay, so just understand that we have seen high impact news today deliver in a manner that would be unorthodox. So it's going against what would be normally expected with a market run that was just small little pop above here yesterday, which was fine. We were looking for that for the week. That's okay. But it's not enough for me to justify a change in stance on dollar. In other words, I'm not changing camps and say, okay, now I'm bearish dollar. I'm not prepared to do that yet. And some of you might look at that and say, well, I'm going to say it's topped. And let's say you're right and I'm wrong. I would never change this approach because it's served me better than doing what I'm saying we should not be doing here, by making the case that one single day has changed the tide in this, this push up in here. So I don't think that, there's enough here to warrant a reversal idea. 1 hour chart, dollar index. Okay, we had a nice pop above that old high like we were looking for there yesterday. And then we broke down overnight, came into this order block right here, these last two down close candles. We popped right here, and then we broke that short-term low. Now, you might look at this here, breaking below that. That might be, in your mind, a shift in market structure. It is not for me. This swing low here, being broken right there. You might look at that and say, okay, yeah, that's a shift in market structure. It is not for me. When we got down to this fair value gap and these down close candles, which makes the bullish order block, from this low to this high, we are now in a discount market and basically oversold. So if we get into this order block here and we start to see a little bit of movement here, which we were starting to, but then they quickly snapped it below that, that to me is how I would see that as a shift in market structure. Now let me explain to you why I feel that way. I'm still holding a modest bullish stance on dollar, and I'm not trying to pick a top. So if I'm looking for a market shift in its structure, not an outright break in market structure and reversal, okay, so I'm looking for just a retracement based on the technicals that this low that should have sent price higher here, and it did on this candle here. It opened and started to rally, and then it completely melted and took out that low. When that occurred, this low being taken out on a discount array, when I see that, that would justify any short-term rally here. As long as it remains below this high, then it's just going to come back up and rebalance here, and that might be rejected. And if that's the case, look inside of all these candles. What's the lowest down close candle? Right there. So there's your rejection block, and we've seen we reached down into that here today. This was the Judas swing for the day. This was the economic numbers that came out. It looked good for dollar, and then it petered out and went down. Okay, so they faded that news and then sent it lower. $15-minute time frame. Fair value gap here in the form of sell side imbalance, buy side inefficiency. Market rallies up there on the news, 8:30, and they quickly send it lower, taking out the short-term low. comes back up into institutional order flow entry drill in the 15-minute time frame. Fair value gap, consequent encroachment there, and then breaks lower, small little imbalance there, comes back in again, just keeps trading lower, and attacking the sell side liquidity here, back in that old bullish breaker. So I'm not convinced yet. It very well may be topping for the near term, but I'm trying to teach you how to not be in a rush, because think about it. We're not trying to catch a short-term or intermediate-term high in a bearish market, which is ideal for trying to capture the best turning point as early as you can. We are in a consolidating market when this consolidation could ultimately continue sideways or could continue a little bit higher. There's too many variables there. Whereas if you were looking for a high to sell short at, using market structure and its break lower when it's in an existing bearish market, that's easy to do that because you're trading with the higher time frame order flow. Order flow right now is neutral on dollar. It's in this large consolidation as I opened up tonight's video with. So it's important for you to understand there's a distinction between trying to capture a high probability short in a bearish market, which would otherwise be looked at as trying to catch a top. Catching a top or an important high or intermediate term high in a bearish market, that's nothing to be fearful of. But trying to capture a intermediate term high to long term high or outright reversal in a consolidation when there's an enormous amount of manipulation going on in the marketplace, you're gambling. And I don't want you to lose sight of that. It's very important that you understand why I'm teaching you the way I'm teaching you, because it's going to serve you well over your career. It's not, let's roll the dice to see how lucky we can get on this one instance, okay? Euro-dollar daily chart, okay? We had the market trade below the short-term low in here. We were looking for this level down in here. Did not offer any more since yesterday's break below the short-term low. So I want to counsel you to go back into your notes and think about what I taught you in terms of running down equity. When the market's bearish, every time we take out lows, you want to be taking profits, scaling out below old lows once we breach them when you're short. If you do not do that, and let's assume that we were all short in a trade and we were looking for this objective here and maybe even lower, this day right here may have completely stopped you out in anything that would have been trailed down as a stop, and this run here would completely neutralize you before, if it were to continue and go lower. Say this is a complete rejection later on in the week. Say like this is completely overdone, and then they end up trading it lower. I would not be surprised by that, but the important point I'm trying to make here is teaching you that partials removes the necessity of being right. Regardless of how good you are going to be, you should always look and strive to take profits as I've taught you. Below old lows, and then look how close we got to our objective. Now we did get below the old low that we were looking to sweep below. So we went 1 time, 2 times, 3 times away from that old low. And again, if you zoom out on your chart, you'll again see what that is. But that's 3 times it went lower. And then on the high impact news event day, they sent it higher, taking out short-term trail stops. Now we have not seen a stop run for a while in all this decline here. So this today, to me, it just looks suspect. Because I'm not in anything to lose any sleep over or upset about. I'm not trying to make more of it than it really is. And that's the balance that you have to maintain in your analysis. Because even when you are trading with live funds, should you ever choose to do so, you want to have that indifference where, okay, well, it did this and that doesn't really hurt me. It doesn't really change anything. It doesn't force me to hurry up and reverse my idea. I want to see now, okay, since it's done this run above these short-term highs, what's it going to do now? Because if it has reversed, I don't need this day to get in. I'm actually going to wait to see if it wants to go higher, and if it creates a fair value gap in here between this candle's high and some other candle that may want to go higher that has a higher low than this candle's high, that creates what? A fair value gap, and then these 2 down close candles become what? A bullish order block. And that's what I would wait to see and measure out whether or not there's an interest on my part to change my perspective on the near term for euro dollar going higher versus where I'm looking for still down here. So in other words, all of this here, I have not changed my mind. I'm not changing my mind. I'm not getting all worked up in a froth trying to say, okay, oh, look at this. Because it looks too manufactured. I just don't trust it. Now, again, I'm willing to submit that if it does go higher and it creates the ideas I just outlined here, which is a normal bullish scenario, then I might entertain the idea of probing the market with some kind of a long that way. But right now, it's absolutely too early to tell if this was even warranted. I know some of you that are new here that just, you want to feel like you're capturing the low in bearish markets. And I lost so much money doing that in the 90s. It's just it's a loser's game. And I honestly learned only by losing lots of money and just feeling completely demoralized. Hourly chart on euro dollar. All right, so again, that lower low here, we traded down below that. Multiple lows taken out, as I mentioned on the daily chart. Relative equal highs in here. We rallied early on ahead of midnight last night. So all of this here, this pump up here, and then drop down into the buy side imbalance, sell side inefficiency. Consequent encroachment, nice response there. Sends it higher on a manual intervention. I don't see this as algorithmically driven at all. So this is what it looks like, when I anticipate it likely to form, which is always going to be like a FOMC or a non-farm payroll event. This is what it looks like, where it's against what would otherwise be expected. The news that came out for dollar should have been higher dollar. The buy side that's a little bit slightly higher than what we've seen it run to, it was still left intact. So it just feels like they're trying to trust, or build trust rather, in that the dollar doesn't need to go up there. And now put shorts on dollar and longs on foreign currency. And I'm just not prepared to have that mind shift yet. Euro dollar 15-minute time frame. Again, just going into that hourly buy side imbalance, sell side inefficiency, consequent encroachment here. Right up in here. And we have bullish breaker, trades down into it here. Rallies, order block, rallies, consequent encroachment, and rallies. So even during the manual override that we have in here afterwards, then the algorithm starts doing what it normally does. But all of this in here, that's manual override. Pound dollar, daily chart. Again, just consolidating in here. Now, if it were to continue higher, watch right here. So annotate that on your chart. We have the bearish handle here, the consequent encroachment, which is a bullish breaker. We might need to come back up in here, and if it does, it's going to want to come into this area right there. Look at these equal highs. So just watch that. We might get some kind of a delivery into that area. I'm not touching cable, and I still wouldn't trade it. Pound dollar, hourly chart. See, the order block in here, we rallied up. Broke market structure to the upside with this swing here. Then broke down, took sell side. Bullish fair value gap. Order block. Hits it. Optimal trade entry. Rallies. Rejection block, highest up close candle. Bam. High to low. Premium. And it reaches up into the premium raise over here. 15-minute time frame. Again, dropping down sell side. Order block, fair value gap. Manual override. Consequent encroachment. Between this candle's high, this candle's low. Hits it. Rallies. And just really sloppy in here. It just feels like they're just pushing it higher, higher, higher just to go against the grain. And I haven't trusted cable in weeks, months really, and you know this. So I don't want to make too much of it, but I keep talking about cable because it's been informative in the relationship to euro pound. All right, in last night's discussion, when I was covering the pound yen cross and specifically dealing with the teaching on cross pair manipulation, this area right in here in last night's discussion, when I was creating the slide, I copied this text here and posted it here and got distracted and never went back in and changed the bullish word here, which was also repeated down here. It was supposed to be changed to bearish, and I didn't do that. And I didn't even notice it last night when I was reading it to you all. I was too, committed into just talking last night, and I failed to observe that this was actually incorrect. So one of my staff pushed me an email from one of our students here and said, "Hey, is there a typo in this area here? Shouldn't this say bearish?" And yep, I just replied to them, good catch. So if you see, obviously, that, please don't email me because it's already being addressed right now. But I cannot go back into last night's video because I don't edit anything. If I make a mistake, that artifact stays just like it is. It's a mistake. If I go into any video ever and edit anything, I lose my credibility because I stand on nothing ever gets lipstick. Once the video is rendered and it's in your hands, that means it's on the forum, it's on the server, you have a link to it. I will not ever go into videos and change it because I've challenged you all to download these videos. So that way you all keep me honest. That's why I do it. Now, I could go back in and try to, first of all, there's too many videos to ever do that. I'm never going to do that anyway. But I'm honest. So if I make a mistake, I'm going to tell you I made a mistake. And this doesn't really change anything. Obviously, it's the next day, and I'm bringing it to your attention now if you didn't already notice it. But this has already been taught to you. So again, what makes the cross a buy model? The first name in the pair is either going to be bullish protraction, where it's going higher, while the second currency in the name of the cross is held in consolidation. Or the first currency in the cross is held in consolidation, while the second currency is allowed to have protraction in a bearish stance. In other words, it's moving lower, while this currency, pound, would be held in consolidation, yen would be allowed to trade lower. And that's exactly what caused the pound yen to go higher like we have here. That was the situation. Okay, yen was permitted to go lower while pound was held in consolidation. So it was this one right here. But the main thing is I just want you to see this is the correction, and I apologize for that oversight and mistake last night. Also, got a question from one of the students. Why did euro yen go up higher even though the better trade was seen with pound yen? So I'm going to show you here basically the dynamic behind it. From October, we had this modest decline of about 100 pips, a little bit above 100 pips in euro. Okay, so from a visual perspective, yes, it looks like it went lower. This is a price swing that was showing weakness. Now, let's compare and contrast that of the Japanese yen. So here's euro futures, high to low yesterday. Here is yen futures. Now, this is not the currency pair. This is the individual futures markets. The way you get this euro futures on TradingView is number 6EZ2021, and you'll get this. Japanese yen is number 6JZ2021, and you'll get obviously the Japanese yen futures. And we're looking at a 4-hour chart in relationship to this high to that low, about 100 pips. And then you have this high down to this low, several hundred pips. Okay, so there's a much larger protraction on that of yen than that of euro. So this, in essence, is consolidating while this is just allowed to tear off and go lower. Why did that happen? You have the low being taken here, and then it goes back into this imbalance and then hangs around. Whereas the low here, once it takes it out, it just keeps on falling. It takes the low out here, it just keeps on going. These lows, look what happens. You have low, lower low, lower low, and then we're spending time too long in this high to low in relationship to that of this move here, where this is extremely heavy and we haven't had those lower lows yet where we see it here. This has a lot more room to go down when this is the weaker of the currency. It has the lower interest rate. It has the differential that we outlined on pound yen discussion last night. And we also have been discussing how euro is just being very, very lethargic because of its relationship to that of the dollar index. And all of this is occurring, and why we're even looking at the crosses is because of that large consolidation that dollar has been in, which is what I opened the conversation up with tonight. So this is consolidation. Even though it looks small and looks weak and bearish in here, on the grand scheme of everything, apples to oranges, this is small movement compared to this. And what set up that move, because you're going to question, well, how would you know that it was going to be moving? Because of what I just taught you last night in relationship to yen and pound, and what I taught you last week with euro pound, how they all dovetail together. All these things, and I know for the new students that just came here, this is going to go right over your head and you're not going to understand what I'm teaching you tonight. And it's going to be frustrating. You're say, well, whatever, I ain't going to trade crosses if it's like this. I don't want to know about it. I don't want you to have that perspective. Come back to this again, months from now. In your journal, under cross-pair manipulation, write this video's date down. Okay, so that way you'll go back into this topic and revisit this idea, because I promise you, when we cover other things in 2022, this whole discussion right here is going to be much more meaningful to you then, because you'll have more understanding and more things supporting your understanding about cross-pair manipulation. Whereas students from like the 2016-2017 group that came in the first class, they would appreciate this lesson more because they have had more time and experience me teaching on crosses. Whereas you that just came in here on the last group don't really have that much experience with it. So what I'm describing here, you won't see this as consolidation. You look at this as, well, this is market protraction on the downside. When we've been anticipating a slow decline, okay, real lethargic drop, because, why? The modest bullishness on dollar. Modest. That's not exceedingly bullish. That's not wildly bullish. I'm not strong bull. I'm modestly bullish dollar. So the mirror image of that, and the heaviest weight in making the dollar index, is in euro. So if you're going to expect lethargic advancement higher on dollar, it goes without saying that the euro should decline. But how's it going to decline? Like falling out of bed like this? Or what we're seeing here? What we're seeing right here. Okay. So what makes the euro yen go up? The fact that the euro was reluctant to trade exceedingly weaker, like we did here on yen. So this basically did more than twice the decline than euro. And if you understand what we're showing you here, this isn't a market that's being held. It's being trapped, basically, and prevented from trading lower than when we look at this pair here, or not pair, when we look at the Japanese yen here on the right, it's allowed to free fall because of its fundamental stance with the differentials and just market structure itself. It was decidedly weaker. So everything was heavily weighted for yen to go down, much more than any other currency. And we only had this little bit of movement so far in euro. So what does that look like visually? On a daily chart, here's this small little range that we traded in from high to low. Look at the range here on yen, high to low. Much more protraction on the yen versus what we've seen on euro. So it's allowed to have a lot more decline than that of euro. Also, notice how we had left this consolidation in yen where this was more jagged. Like, look how many times it's already gone lower. Lower than that low here, 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 here. Retracement. This low taken out here. This low taken out here. Retracement. So all these jagged lower lows. When we've consolidated here, we had this one low in July that relates basically to this low here. And then euro just kept going lower, 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 lower. Over here, this one was being held in consolidation. Okay, so all this time in July to that of the last week or so of September, what should have been seen in euro yen? Euro yen should be going lower between July and the last week of September. Then we get into the last week of September where the consolidation ends because of the analysis I gave you last night in euro. I'm sorry, not with euro, but with pound and Japanese yen, the differential, the SMT studies. Then this is allowed to leave its consolidation and attack the sell side liquidity here. Once it came back up into this area here, then it drops exceedingly bearish from that point. It hadn't had a chance to go down multiple times like euro was going down here. So this was like pent up energy for yen to attack all of the folks that was hoping that yen would go higher, and stops were resting below that. It went down here on a shallow basis below that low, retraced back to a short-term premium array in the form of the gap here, rebalance after the sell side to buy side, and then displacement. All right, so here we have the cocoa futures homework assignment I gave you last night. If you have not done the homework, stop the video. Okay? I'm going to count to 3, and on 3, I'm going to continue. 1, 2, 3. All right, so the daily chart, let's go up to the higher time frame first. Right, so we have the old rejection block here. Now, if you don't understand this, it's because you have not been studying in the commentaries. The commentaries that has been going on for several years now that are outside the core content month commentaries. Okay, so in other words, the ongoing mentorship stuff. We have the lowest down close here. We went down below it and then rejected that. We do not go back to this one when we see that. You go back to this one here, kind of like a reclaimed order block. Draw that out in time. You can see we went down below here and then rejected. So this is the rejection block here. It's confirmed there. And if it goes down below that, when it's underlyingly bullish in cocoa, because of all commodities being bullish, because of all the pandemic, higher prices, go back and listen to the 2020 June, July, September. I'm sorry, September month, didn't I? My own birth month even. June, July, August, and September of last year. So the new students, you don't really have, I guess, really any reason to jump back into that, but we were expecting higher prices in commodities. And I outlined, the big run in the grain markets, soybeans and corn and wheat. And I called sugar higher, called, I don't remember exactly every commodity, but I said all commodities were going to go up. I just don't want to say a commodity that I really didn't say. But cocoa, here's in July here, it creates a low, it rallies up, consolidates. So we had a low, then consolidate in an underlyingly bullish market. Even though dollar has been consolidated, higher prices, inflation has crept into commodities because of all the concern about we may not be able to have food. And this is why I've been telling you all for over a year, buy food, get food in your house because it's going to be a problem. Now everybody's hearing about it on the news. Everybody on the news stations are talking about how the shelves are empty. What do you think is going to happen? People are going to freak out and they're going to do a run on the stores. And they're going to constantly go into that panic buying again, which is why I've been telling you to get prepared for that. Because if you didn't, You're going to regret it. Well, all this is the aftermath of me telling you that food prices are going to go up. You're going to start seeing shortages, and you're seeing it here. And now we had a short-term run above this swing high here, there. Didn't go really high up. It just went above it here, and then we dropped back down into the rejection block here. So from this low to this high, we are in a deep discount at a rejection block. And we're going to look inside this swing here on the 4 hour now. So back into the 4 hour chart, here is that rejection block from the daily. It just looks a little bit different because it's now being plotted on a 4 hour chart. Here's that initial drop down on the rejection block. They sent it higher, and then drop it back down in below the rejection block. Order block, opening of these last two down closed candles. And then we have the volume imbalance. Oh, look at that. So volume imbalance, bullish order block, deep discount below the old rejection block, expected to go higher. We have a gap here. On this day right here, it opens here, trades down, fills the gap. That's a buy. Rallies, comes above the bullish order block. 1, 2, opening price, extending out in time. We trade above it here, and then right there, that's a buy. What are you aiming for initially? Here, then here, and then the buy side resting above here. Rallies here, small little imbalance here. After a down close candle, what do you expect? Whenever you have a down close candles, when it's bullish, they're basically like speed bumps. They are like they actually twofold really. They're a speed bump, basically saying, okay, we're in an unwinding bullish market, and now we have a down close candle. A down close candle is not a reversal. It is not to be fearful of. It's not to be anxious of. You want that because it will give you confirmation if the next day after that down day rallies. That's what you're looking for. If we trade down below it and we have a gap like we have here, that's when you anticipate institutional order flow entry drill. Institutional order flow entry drill here, rallies, and look how strong that is. Happens after, you should be writing this down in your notebook. If you're not, you're really missing it. After a down close candle, and we have not yet taken out buy side liquidity when it's bullish. The next day and days should send it higher. And then we get this little shallow run above that high here. Look what happens. Another down day. It's reversing. It's going to reverse. No. We get that sudden rush again. And the next day it opens, rallies higher, and creates the high. Interestingly enough, I gave you this high, and after we've taken this buy side, we've worked towards the high end of that dollar index range, and then we get this. So it comes back down into down close candle, imbalance in here. So we'll see what we get in regards to cocoa in here. I prefer to see cocoa consolidate because this one's kind of been lethargic, and we're getting ready to go into the holiday season, and there might be issues with not being able to have cocoa or supplies of cocoa because of confections and candies and things. And it's just, the only issue I have is, okay, let's assume they don't have it to make the candies and such. If nothing's really shipping or moving around, it really won't make a difference. So I'm interested to be studying this myself. So I'm watching cocoa for that reason. I'm trying to figure out, does the supply chain impact this commodity because of things not being able to be moved around? Or does that still not even have a factor in it because the demand issues for people wanting to have confections and chocolate and such, does that drive this commodity higher? I'm watching it for that reason. I'm not sure, to be honest with you. So I'm learning in this particular commodity and under what we're going through globally. Hourly chart. If you look at the low here, up to this swing high, using swing trading ideas I teach you in the mentorship. From this low to this high, if we take out that high here, which we do, and if we do go above this high, how far can it go? Well, you want to have a partial here, and then you have one standard deviation, or negative one standard deviation here at 27.85. Now, when I screen captured this chart, I have my cursor right on this candle here. So that way, when you're seeing this high 27.92, that's actually this candle's high. And you can check that for yourself. Don't take my word for it. So the high here, it went to, again, 27.92, and your target would have been 27.85. And there is no spread on commodities. So you don't need it to go above where you're trying to get out at. And again, you can see the details here. Let's go out to a daily chart and do a swing trading idea for targeting using the low here up to this high. So if it's traded above this high here and we've consolidated and we worked off this low here and we think it's going to go above this high, how far can it go? Using the market structure, swing low here to this high here, swing trading ideas for targeting -5, okay, 27.85. And again, I'm holding the cursor on this candle here to show you that the high is actually directly linked to this candle right there. So it's not bad for targeting purposes, and it's right out of the notes you learn from the core content here in the mentorship. So that's the one for cocoa. I've decided not to give you a homework assignment tonight because I want to work on a YouTube video. And you're probably thinking, oh, those bums, they don't even pay for mentorship and they're getting something we got to do without. I gave you something extra tonight with yen. Okay, so that kind of like hopefully answers a little bit of the doing without tonight on homework. So enjoy tonight without homework, and I'll touch base with you tomorrow. And until I talk to you then, be safe.